Hey, good morning. Let's go over today's trade plan. So in the overnight session, we were using 33 to 36 as the bull bear zone, and a break below it resulted in a test below the recent lows, below 26.27, where responsive buyers were active, and we got a push back up towards the recent range, so back up towards the 32 to 34 area. At this point, heading into the open, we have pre-market support at 2031 and pre-market resistance at 35 to 36.5. And the directional bias is neutral, but so far the market is just trading within the recent balance. So overnight we tested below it, found buyers, and now we're back into it. And heading into the open, our short-term directional bias is pretty neutral because at this point we're just stuck in a range and the market can really go either way. We're seeing a negative divergence between the S&P and the Russell, but even Russell has recovered a bit overnight. So as far as the Russell goes, as long as it can hold above 1168, buyers can still be active in that market. And in the S&P, we have support 26 to 28, which is really the bottom of the recent range. And at this point, that area has been tested several times, so we do have to be careful if ES heads back down there, because a break below 26 to 28 could result in liquidation down to 19.5 to 21.5, where buyers can be active, but potentially even lower down into 15 quarter and 2010 to 12.5. So the market is at an inflection point where we either need to break out above 35 to 36.5, and that would confirm the buyers in control, or if we continue to struggle at some of these prices, then we could be setting up for a break below 26 to 28. But at the moment, the market is just stuck within the recent balance, and the market bias is pretty neutral. So heading into the day, we do have to be pretty cautious on where we're entering trades. On the long side, holding above 31 would tell us that short term, the buyers are holding up this market pretty well, whereas a break below 31 would be a sign of weakness and a red flag for buyers. On the upside, a breakout above 35 to 36.5, especially if it happens on decent momentum and volume, would confirm that buyers are back in control, and at that point we could go up to 39.75, Friday's high, and then the all-time high at 41.75 to 43.75. There could be a reaction at that zone, but at that point the buy side would be in firm control, and if we're running on above average volume or even decent volume, we could be setting up for a test above the all-time high. So heading into the open, again, the bias is very neutral because the overnight session, we saw some weakness, but buyers stepped in at the bottom of the previous range, and at this point the market is still stuck in balance, right? Bigger picture, we know that the market has been in an uptrend and buyers have been very dominant, and every pullback we've so far seen in the market has been bought and has attracted buyers. But if we continue trading at these lower prices and continue to see weakness, then that breakdown scenario could come into play. And if we do break down below 26 to 28, then we've built a lot of volume in this range, and that could result in some acceleration on the downside. So 26 to 28 is a very key spot. 31 pre-market is important, and we'll just be seeing what kind of reactions we get there. But if these levels start getting taken out, then we could be setting up for a pretty decent downside move into at least 19.5 to 21.5, with potential to go down to 15 quarter and 10 to 12.5. And then on the upside, these resistance areas are really going to be key. So those are the main ideas heading into the open. Let's see if the buyers can hold it up this morning, and we'll take it from there.